The million dollar question: how do entrepreneurs transition from self-employed to owning a business that turns a profit? My name is Chris Waters, and this podcast has the million dollar answer. Welcome to CEO Secrets. Hey guys, it's your host, Chris Waters of CEO Secrets. I have got a financial genius on this episode. Damion Lupo, welcome to CEO Secrets. How are you doing?
I'm good, Chris. It's good to be here. I don't know if a genius, maybe troublemaker, but I guess we can throw it around, whatever we want to say.
So just in case anybody's listening and doesn't know who Damion is by chance, he's a best-selling author in personal finance and money thinking, host of a podcast. Actually, you've got a new podcast. It's called the Financial Underdog podcast. You've started over 50 companies. Is that right, Damion?
That's it. Yeah, exactly.
You outrightly reject regret and speak to it as the ultimate life failure. I got a lot of questions for you about wealth building, so I hope you're ready.
Let's do it, man. Let's rock and roll.
So just real quick, like basic stuff. How did you get into this? Like, what's your story? How did you, get involved in the finance sector? I have so many questions going through my mind right now. Like, how on earth did you start 50 plus companies? Let's start at the top. How'd you get into, tell me the story of how you got into finance and then dive into the 50 plus companies.
Well, back in the day, and the day is whatever day it was many years ago, it was probably a Tuesday. I got thrown out of college because I started a bookstore on campus that put the other bookstore out of business. And this is before Amazon put all the bookstores out of business. And I just realized at that point, this isn't my path. Like, I'm an entrepreneur. I'm not somebody that should go to school, get a traditional degree and go work for a big company. And so I had already started some businesses when I was a kid growing up in Alaska, solving problems, mainly that we were broke and basically poor. And I hated that. I rejected it. So I wanted to go make some money. So I hustled. I did a little Grant Cardone in the 90s. And then leaving college or being thrown out, whatever you want to call it. I said, all right, so you got to do something. I need to go out there and build something. And so unfortunately or fortunately, I got a job with Wells Fargo, and that lasted about 6 months before I saw how much of a criminal organization it was from the inside. And I left. And that was basically the last job I had until I volunteered and got fired as a volunteer. I'm a terrible employee because I'm always trying to do things to beat the system or beat the opponent or solve problems. And then, 50 companies later, it was just about finding problems and saying, I'm going to go solve them. And so that's what I ended up doing over and over again in different forms, different industries. And it was because that's who I am. It's my DNA. I can't help it.
How do you manage 50 plus companies? Like, how many key leaders do you have in place running 50 companies?
So I wish I was like, I could have a Richard Branson or Donald Trump story. Like, as a business person, you have all these companies. I don't have 50 companies now. I've just started them, launched them. Some have sold, some have been closed down. Some of them were complete failures. And those are the best teachers. And so now there's 4 that are active, and I have key people in each of these running them. And that's the key. It's with business. One of the lessons, the biggest lessons, and every CEO knows this, it's not about what you're doing. It's who's running things. It's the talent. It's always about the who. I think Simon Sinek a lot of people talk about this.
Yep.
And so one of the things I screwed up in the beginning, I had a lot of weak people that I didn't necessarily trust because they weren't really trustworthy, mostly because I wasn't trustworthy and I was too afraid to pay them what they were worth. Actually, I was paying them. I was just paying them what a C-level person was worth. And over the years, what I learned is that you get A rock stars. They will make sure that only A rock stars are around them. So you let them hire other A people, and then you provide guidance and wisdom and vision, and then support them with resources. And it really does change how businesses work and flourish versus exhausting the founder.
Mm-hmm. Yeah, that's a good point. You sound like, like me, the serial entrepreneur. Man, I love that point about, leadership and when you hire A type people, they will attract other A grade type people. And I agree, you got to pay people what they're worth. And, it's like, it feels like as a founder, you want to be doing, and you have to kind of learn to start overseeing versus overdoing, and empowering other people and trusting other people to, take the baton and take it to the next level. So that's some great insight there. Well, so let's go back to this topic of finance specific to wealth. Like, you call them the green and red arrows of wealth. What are those?
So this came from years ago. I had somebody that showed up, called me and said, "Hey, we want to talk to you about money." And I said, "What do you want to talk about?" And they said, well, we were told that you know something about money. And I said, okay, well, do you have a question? And they said, well, we're really concerned because we're about to sell our house. We're going to have a couple $1 million. We're in our 50s and we've got some money in the stock market. And we don't really want to put this $2 million in the stock market because every day the news comes on and we see these green arrows that mean that we're richer. And then tomorrow might be a red arrow, or it is a red arrow and we feel poorer, and it's like a damn roller coaster. And so they said, we don't want to do that. And I said, great. So we basically shifted from the Wall Street casino to a place where they had control. And that was about them taking control of their money and doing things. And it really shifted the conversation from being a victim and blaming financial advisors to taking responsibility for their money, their life, their freedom. And so I think that most people, unfortunately, are brain damaged into thinking that that's how you're supposed to do it. Make a bunch of money, hand it to somebody, and then hope and pray that it'll actually be bigger. I call that smoking a bunch of hopium, and it never ends well. And so
that couple you were mentioning, they got like roughly $2 million. What did you guys end up doing with their money? Was it one of your companies or?
So in that case, they said, "What do we do?" And I said, "Well, I can help teach you. I can help build the muscle that you need to actually have this freedom, because I'm not going to manage your money, and you all need to take control of this if you want to be truly free." I started helping them go to courses, and I taught them about money fundamentals, principles, and just giving them a chance to participate so that they built up their Pee Wee Herman arm and turned it into more of an Arnold Schwarzenegger arm, and shifted their ability to have that confidence. Unfortunately, they did what a lot of people do. A year and a half later, they said, "Oh, we're good. Like, we know everything." And it took a year and a half after that until they lost the whole 2 million.
Oh man. Why do you hate the word retirement?
I think
What
there's
is retirement, by the way? And where did it come from?
so it's a funny word, because this wasn't really a thing until the early 1900s, and it had to do with farming and an industry. So like if you had a farm and if you had an old animal, you basically said, okay, we're going to retire the animal. You took it out in the field and shot it, or your equipment was run down and you said, okay, we go bury it. And so what people have said is, oh, now we're supposed to retire at a certain age. I'm like, so you're supposed to just take yourself out and shoot yourself in the head and be done with it? And here's the thing. We've been taught basically that we're a cog in a system. And when we're no longer useful, we're supposed to go out there and have our golden years with a golden watch and really just ache and creak for a while until we drop dead. I don't like the whole idea of taking this whole lifetime, building up all this wisdom, and then stopping when you're at your peak of knowledge and experience. And I also don't like this whole idea of waiting until you're 60, 70 years old to actually experience life. So in general, I think you're saying, hey, when I have all this experience and I've done all these things, I'm going to stop. I think the universe is going to say, okay, cool, then you're done. It's why the average male in America dies within 3 years of retiring, because the universe says you're taking up resources. Let's put somebody else in your spot. That's how it really works.
Damion, do you have any kids?
Nope, not yet.
No kids. What's your philosophy on teaching your kids how to be, savvy from a financial perspective?
I think
How do you be a good role model to your kids? Like, should you live like, what is it? That book about the millionaire next door? Like, should you live in a very humble abode so your kids don't get the wrong idea? What's your opinion on?
I think with the idea of being humble, I think there's value in that. One of the stories I've heard, whether you like them or don't, one of the stories I've heard about the Trump kids is that they were out there on construction sites and they were doing things as young kids. And so that piece of this story, I think, is really valuable, that you keep kids out there learning, not just from the back of the Rolls Royce, but you literally put them out there and they understand reality for the population, whether you have nothing or you have hundreds of millions or billions. And so I think that you have to teach kids. I firmly believe that you have to teach them two things. You have to teach them self-responsibility so they own everything. They're not blaming anybody for anything, that they own their life. And you have to teach them about abundance. I think, unfortunately, The Millionaire Next Door, that Stanley and Danko wrote, which I thought was a great book at the time, but now I look at it and I go, you're teaching people how to be cheap. And I don't like cheap people. Nobody likes cheap people. The worst is a rich, cheap person. Like, you're around him, you're like, you suck. You just have all this money and you're cheap and nobody likes to be there. They're like alligator arms at dinner. Like, they don't want to do anything. They're always trying to hold their money back and nobody likes that.
I love that, alligator arms. I'm going to use that on Thanksgiving. That's awesome. Oh man, that's too funny. That's awesome. Alligator arms. Like, where's the happy balance between, like, trying to get to a certain point from a cash flow perspective and, or money in the bank, like, and, like trying to enjoy life. Like, what's your philosophy on kind of that happy medium?
Well, I think that there's always got to be a bit of a balance, but it's going to be out of whack. You're never going to have this perfect balance and this harmony where it sounds like, oh, everything is tuned. And it's, I mean, you're going to have some C flats happening throughout your life where it's not going to be a perfect note with that balance. So what does that mean? I mean, for people, it means that you're going to have to hustle. People that think they can have everything bliss. I've actually heard a lot of spouses where they talk about how, in fact, they teach on Facebook a lot and they teach about how to have this beautiful life. And I'm like, yeah, but your spouse is out there grinding it, making $600,000-$800,000 a year, and you're over teaching about happy life balance. You have no clue, and you're totally disingenuous because somebody's got to go create it. So I think there's seasons. So there's a season where you actually work the soil and you work your business, you learn, you're growing. It's not overnight. Everybody thinks that, oh, I'm going to create a billionaire in 6 months. I'm going to be Peter Thiel. I get that, but it's not reality. So you go out there and you hustle. And I think you also have to recharge because as you're hustling, you will burn out. I don't care if you're 20 or 50, you just burn out. So then how much is enough? I can tell you $20 million is not enough if the money is the only focus. And that was my experience back in 2008. $20 million turned into -5. And all I was thinking about was more money. So it's not about the money that will make you happy or free. And you have to kind of sit back and say, what do I actually want in my life first? And then let your businesses and let your pursuits support that life. Not, I'm going to do business and then I'm going to buy more life because it's never ending and you'll never have enough.
What are your pursuits and passions?
So I have one mission, and that is to free 1 million people from financial bondage, to break financial shackles one shackle at a time. That is my singular focal point for my businesses, for my team, and our tribe knows that's what we're doing, and so they support doing it with other people. So there's a ripple effect, and it's beyond. There's a shift. So 15 years ago, I was all about making the next $1 million and the next Ferrari, and it was never enough. A Ferrari, Lamborghini, a whole fleet of them, like, didn't matter. And that was about me. It was a very hedonistic, just indulging experience. And what I shifted to after I lost it, the universe, God, whatever, said, wrong purpose, dude. It's not about you just feeding your face and getting fat. It's about you going out there and rising and raising people up by pursuing the teaching and lifting of humanity. And that's what the breaking of shackles is, because it's modern day slavery that people have money ruining their lives because they don't know what it means or how to use it.
Mm-hmm. Damion, I mean, outside of, obviously you're trying to have a positive impact on the world. And I read the notes about, these companies you run with the unified vision of freeing people from the shackles of money. But like, what do you do outside of work? Like, what are your interests? What are you doing when you're not hustling and trying to, have an impact, positive impact?
So it's interesting. It's really simplified. It used to be that my vision had just a whole bunch of stuff and it was almost overwhelming. It was almost exhausting just looking at my vision. And I was like, man, I need a nap before I even start anything. And so what it's come down to is a grounded state where it's about connections with people. So I enjoy hanging out with my inner circle. I enjoy gardening. I enjoy being in nature. I like traveling, but it became less and less important the more I was grounding into my local environment and connecting with people. So I don't know if this is what happens when you get older. Being in your 40s is different than your 20s, but it's what brings me joy is connecting at a heart level with people. And I don't need a whole lot more than that. I don't even want a whole lot more than that. And I used to look at people that said, "Well, I don't need a Ferrari. I don't need a castle." And I go, "You're just being lazy." Well, it's not necessarily that people are being lazy if they decide, but they're not limiting themselves. They say, "I can go do this, but I choose here's what I choose to do because that's actually what I believe I'm here for." It's not just more for the sake of more.
Hey, something you mentioned earlier was about, for example, the couple with the $2 million and, this idea of like entrusting somebody with your money. You mentioned in lieu of, for example, just trusting somebody with your money, go get educated on how to handle your finances. Like, but what are the skills and tools you need to learn to be in a good place to make sure what happened in that example you mentioned earlier doesn't happen again?
Well, I mean, this is a good one for everybody to take out a pen and take a note. It's called blood and mud. I mean, the skills and tools, it's not, there's not like one perfect one. Like people will say, what do I do first? And I go buy an ounce of silver. They're like, then what? I'm like, go do that. And they're like, well, why is it only that one thing? I go, because most people won't do that one thing. So I'm not going to go into any other depth of anything if you're not willing to go spend $30 and actually hold real money. But the reality is learning business and investing and becoming financially free has more to do with your resilience and your tenacity going through muddy, bloody life and learning and tripping over yourself and falling and busting your nose than it does to learn some perfect tool at a seminar or a book or an MBA program. It has everything to do with out there. something that Robert Kiyosaki and I were talking about a couple of years ago on a cruise. He said, wealth is not about money. It's not cash. It's not cash flow. I was like, okay, like it's confidence. He's like, kind of, but really what it is, it's the experience. It's you going out there and having the experiences. And I said, well, I must be a trillionaire then, because I feel like I've had every experience and screwed them all up. But that's the reality. And most people are so afraid of making a mistake. They don't want to get bloody. They don't want to get muddy. They're like, no, I'm in good shape. Everything. They're playing not to win. It's very protective. And you know what happens when a team starts playing not to win? They lose. And so that's what most people are doing. But it's really the wealth lies in the experiences and being willing to go out there and look silly, look dumb, make mistakes, and grow from that.
That's some deep stuff, man. Getting really philosophical on me. I like it. It's good. Those some good little nuggets you're dropping right there. I'm on kind of a serious note. I'm just kind of curious, like, what are you investing in? What do you think about Bitcoin and some of these emerging, technologies, cryptocurrency? You have any thoughts on any of that stuff?
Oh, absolutely. I mean, our monetary system is changing. There's no doubt that we're going to a purely digital system, and it's going to be for control and power. You see about everything that's going on in the world, whether it's the pandemic or just governments and how they're operating, more surveillance, whether it's China, Russia, the US. It's more about control, and it's more about people that don't trust the other people. So the people in power are trying to do other things, and the banks are the worst. So what are the banks doing? What are the governments doing? They're all saying, we're going to do crypto. We're going to have a centralized controlled thing. We're going to social score people. They're doing it in China. Like it's happening. So where are we going? We're going to a place where it's going to be digital. And I think there's going to be a war between freedom and tyranny. It's going to be the Bitcoins. It's going to be the private, decentralized versus the centralized control. In China, they are developing, and who knows, this could launch next week with a purely crypto digital currency. And they've been building up thousands of tons of gold. Why are they doing that? Because they like shiny bars of metal? No way. They want to use that to try to take out the US dollar. My belief and where I think we're going is that China will take their crypto and they will have it partially gold backed, and they will make a run to take out the US dollar in terms of because we have the oil dollar, we have the petrodollar, we have the pharma dollar. The US dollar has its power because of our ability to control these things. Yeah. When you take that out, when China starts working with the Middle East and Russia for oil, and they start saying, okay, we're going to take the US out. Gaddafi and Saddam Hussein did the same thing. They said, we're going to take the dollar out of play. We're going to have a gold backed dinar. We're going to have a gold backed. And guess what? They got like top 10 list, and they got executed, and we went to war to kill them. So are we going to do that with China? No, it's just too big. But that is where we're going. I love the crypto. We are going there. There's no doubt in my mind. And it's Jeff Booth talks about this with technology in The Price of Tomorrow. If you don't understand it, it's going to run over you. So what do you do about that? You get in the game. You go out and you buy $100 worth of Bitcoin, and you start studying it, and you understand that's the future of money. And in terms of investing, I think everybody should be investing in things they understand. If you're investing in stuff and you don't understand it, but it's really sexy, you're going to get killed.
How many Bitcoins do you own, Damion?
Man, I'm not talking about how many Bitcoins I own. Are you crazy?
Tell everybody how much money you're worth.
It's funny that people, it's like, how does that change our opinion of somebody? And it's funny because we either look up to them and say they're rich, or they're stupid, or we're envious, or like, it's amazing how that changes our experience of somebody. And if I said I have $5 worth of Bitcoin, people would be like, well, so you really don't know anything about this stuff. And if I said I'm one of those guys that in 2010 went out there and bought it for 3 cents a piece, and I just happen to have $100 million in my back pocket that's in cold storage, does that change anything? I mean, I know I have friends that do have that. And so
what's one of your favorite sales books?
Favorite sales books?
Yeah.
Holy mackerel. I like Jeffrey Gitmer's stuff because it's easy to digest. Yeah. And just the little black book of networking and his stuff. I think there's some depth in that. I mean, here's the bottom line with selling. It's not old school. Like if you're trying to figure out how to sell, and if you're in business, you have to learn how to sell. It's about relationships, because relationships take selling to a totally different energetic and spiritual level. Most people think, well, if I ask the right question and trick them in, they'll sign. That's not how selling works in today's world, in my opinion.
I want to ask you a question about entrepreneurs. Why are entrepreneurs typically terrible investors?
There's a totally different set of skills for being a business person. You can sit there and you can risk everything. And if your business falls down, you do a marketing campaign, or you go into a new space and it doesn't work, you can start over fairly easy. Start up, raise some money, go do it again. So risk tolerance and position sizing on what you're going to do, you can literally invest it all and risk it all. And if it doesn't work, okay. If you as an investor do the same thing, there's a thing called a drawdown where you take a loss, you lose 50%, you have to make 100% return to even break even. So there's a different set of skills and emotional tolerances around investing versus business. You can be a bit more of a daredevil in business, but if you're an investor and you have the same daredevil skills, you're going to start over a lot, and it's a hell of a lot harder to start investing with zero than it is going into business with zero.
Are you both an entrepreneur and an investor, or just one or the other?
Now, it's sort of weird because I started off as an investor years ago, and it was an investing business because I was buying houses, and I had to be creative about how my business was working because I had no money, and so I was like, well, I'm going to be an investor and a businessman with $14. I mean, I had nothing, and so they both work together, and I learned over the years that they are totally different skill sets, and if you try to apply the same skills and ideas in both places, you're often going to get hurt in one or the other.
So I know you're involved in a hedge fund, and I have a question for you from a asset acquisition and building up cash flowing assets perspective from macro, like on a macro level across the US. So, institutional money has flooded what it seems like almost every single asset class. And an interesting idea is in a lot of these tertiary markets, you can surprisingly find homes for 50, 60, $70,000, and they rent out for like 700 to 800 bucks, and the cash on cash return could be 15, 16% after you subtract property management, miscellaneous repair fees, et cetera. And institutional money hasn't entered that space because it's fragmented property management, very labor intensive. But it's an interesting like gap to get a substantial number of assets under management. That's on the residential side, and that's my background is on the single family residential side. So I'm kind of curious, what are some other gaps in your wheelhouse that you see in the industries you're involved in?
Well, it's something I'll say too. That was my initial like adventure in real estate and investing 20 years ago, was those type of tertiary markets. It was a secondary market when I was doing my stuff in Phoenix. So I was buying houses. What people don't see when they look at these turnkey cash flowing properties, they don't understand CapEx until CapEx bites you in the butt. And I'm talking about capital expenditures where a roof goes out, a water heater goes out. And so that 15 to 17% or whatever those numbers are, in reality, when you look year over year, not quite what it seems, because pro formas generally don't have a lot of those things. They sort of sneak out of nowhere. So I think I think it's a great place to learn. But I also think in these tertiary markets, it's incredibly dangerous for people to think that their spreadsheet is actually going to be reality year over year, and there's not going to be a lot of unexpected expense. Outside of that, you're exactly right. There's huge amounts of money that are looking to be placed, but it doesn't want to be placed in lots of a million or two or five. It's looking for 20, 50, $100 million placements. So they're not going to go and look at $50,000 houses. They will look at bundles of $200,000-$300,000 houses if they can go buy 100 or 200 or 500 of them. That's what you saw happen after 2008 with the Wall Street crowd going out there and taking out these bundles from the banks. So right now, where's the opportunity? The opportunity is in finding stuff that's too big for mom and pop and too small for the big players. Take that stuff, get a bunch of them, and then you bundle them up. And at that point, you can actually sell that if you want to a bigger player, or you've got the efficiencies. So whether that's smaller fourplexes, like eightplexes. I like eightplexes because they're bigger than a fourplex, so most people can't touch them, and they're too small for bigger players. So stuff like that I think there's an opportunity for better caps, for better returns. And then you bundle them up and you've got an asset that you could actually sell for a way bigger multiple.
So like thinking back to 20 years ago when you were buying up single family homes, like what if you, do the home inspection, you make sure that all like, structural type issues that could come up over the course of 5 years were, taken care of. And then you hedge the risk of potential repairs with a home warranty, right? Through one of these home warranty companies to cover things like, your plumbing, dishwasher going out, hot water heater going out, like, aren't those some strategies to be able to mitigate some of those risk and capital expenditures you were mentioning?
Absolutely. They do mitigate some of those risks. When you actually have an inspection done, you're less likely to have a roof replaced next month or next year. What you can't avoid is humans. Like there's a human element. Like people will say real estate's amazing, except for the humans that are involved. And like I had a lot of properties in the South, and it was interesting because these would be 50, 60, $80,000 houses. Cash flows were amazing, you know, eight, 900, maybe $1,000 a month. So these cash flowed $300 a month. That's really good, except when somebody is constantly setting their kitchen on fire. And I mean, this really is a thing. Like there's always a turkey blowing up in somebody's kitchen. And it's not just on Thanksgiving, it's like every Sunday. And so these type of things are real and they're expensive, and insurance happens, but it's like the X factor. So it's not as clean as the Wall Street's bond portfolio where it's messy. This is when I talk about bloody and muddy. Like, yes, you can mitigate a lot of stuff, but it's also messy because there's humans involved. And there's the other thing, which is called the humans at the government level. Like right now in 2020, you've got the government saying, well, if you don't pay, nobody can evict you. The CDC now says you can't be evicted until the end of the year, and that'll probably get pushed. So I'm more and more concerned about the government getting involved and screwing with things like the housing, even though housing is critical and I like it as an asset class. The government is getting way too involved in making it really painful for landlords and making it really easy for certain types of the population, meaning certain socioeconomic groups, not race or anything, but literally how much people are paying. It's making it easier for people to say, well, I don't have to pay. And what do they care? They'll just move into the next thing after they haven't paid for 8 months. I've had that happen to me. It's not fun.
So, like, given all the things going on politically and economically, where do you see the biggest investment opportunities? And something else I'd like to touch on is if any, for anybody that follows Gary Vaynerchuk, and he has these entrepreneurs talk about wanting passive income. And Gary says the only passive investments are real estate and stocks, and, collecting shareholder distributions. And to your point, real estate, you've got people involved. So my question to you is, what's your thoughts on what a legitimate passive income investment is? Let's start with first question. Like, where are the big opportunities given the political and economic climate going into 2021? Before you tell me what, some of your thoughts are on true passive income investments.
Well, okay. So to start with, one of the things that people get screwed up on in terms of saying, I want to have passive income is it's an abdication of responsibility. That's what most people are going to do. They want to hand their money to somebody or something, and then it's just going to pay them and they don't have to think about it. That's like saying, I'm going to have a partner and I'm going to have passive sex and it'll be fine. I don't have to actually engage. Your partner's going to leave. Like, give me a break. So you have to actually participate. I mean, that's more fun anyway. And I think it's the same with investing in business. So, with passive, yeah, with you, I mean, you can passively ride a roller coaster and you can't control it. And that's what Wall Street is. So if you like the ups and the downs, great. That's cool. I think you can do a better job by being actively engaged with smart teams. This comes back to the who. And we were talking about my companies and people that are there. When you have great people that have integrity and they're looking at seasons, too many people are too anxious. And it's not that you don't hustle, it's that you actually understand seasons and you don't try to do everything in the next week. So when you're maybe looking forward into the future and you look at real estate, you say, okay, where are things going? And let me make sure that this is something that the seasons will support versus if this doesn't go perfectly over the next 2 or 5 years, I'm going to get clobbered. And so I see a lot of people trying to rush things. So, I mean, I like things that are sustainable, that are long-term sustainable. Obviously, housing is going to be good, but we have a government problem. One of the things I like is that Amazon they haven't forced people, but they've almost forced people to just buy way more crap than they ever needed or even knew they wanted. And so now you have a problem with too much stuff. What happens then? Self-storage. So why are they being built everywhere? It's not because all of a sudden people just want to clear out space. They're just buying all this junk. So I think that that's one of those things that if you're talking about closer to passive, that's one of the things I like. But the thing I like the most is people having their own business because it builds you as a human. And I just think we're in the cycle where business is more valuable than assets. Every asset class, you're talking about real estate or bonds or stocks or gold or whatever. I think right now we're in the business cycle. I think that that's where the most opportunity is.
Damion, for people listening to the show, what's the best way for them to reach out to you, learn more about some of the things you're doing in the wealth building, financial advising, investing world?
Come visit me at financialunderdogs.com. Listen to me every Monday. Financial Underdogs. That's where I talk about all this stuff. And there's a lot of philosophy, personal development. and just really my take on the environment. And it's not a philosophical take so much as it's real world bloody muddy experience that I'm bringing to the table, and it's raw, uncut, unfiltered, and uncanceled.
Cool. I'm at the website now, financialunderdogs.com. Yeah, man, you got a nice little meld of like the philosophical piece of, just living holistically, but, also going after your dreams and goals. So I appreciate that. That's great.
Thanks, man. I appreciate the opportunity to dive into it.
Well, guys, go check out the Financial Underdog. Damion, thanks for being on CEO Secrets. You shared a wealth of wisdom today. Be sure to hit that subscribe button if you're listening on iTunes or YouTube, and tune into our episode next week. Bye, guys.